I believe that today we're taking a critical step towards both ending the war in Gaza and setting the stage for dramatically advancing peace in the Middle East. And I think beyond the Middle East, in very important Muslim countries. I support your plan to end the war in Gaza, which achieves our war aims. It will bring back to Israel all our hostages, dismantle Hamas's military capabilities, end its political rule, and ensure that Gaza never again poses a threat to Israel.
So today is a historic day for peace, and Prime Minister Netanyahu and I have just concluded an important meeting on many vital issues, including Iran, trade, the expansion of the Abraham Accords, and most importantly, we discussed how to end the war in Gaza, but it's just a part of the bigger picture, which is peace in the Middle East. And let's call it eternal peace in the Middle East. I also want to thank Prime Minister Netanyahu for agreeing to the plan and for trusting that if we work together, we can bring an end to the death and destruction that we've seen for so many years, decades, even centuries, and begin a new chapter of security, peace, and prosperity for the entire region.
And India Today Global's Pranay Upadhyay is now joining us on the story with more details. Pranay, tell us more about the Gaza peace plan that has been released by the White House and which is now being hailed by Prime Minister Modi.
Definitely, Anjali, there are some important features of this Gaza peace plan presented by US President Donald Trump in the presence of Israeli Prime Minister Benjamin Netanyahu. One, it gives option to Hamas that if they release hostages immediately, the plan will start rolling out within the 72 hours, where there is a phased withdrawal of the Israeli troops from the Gaza Strip. Besides that, it also gives a provision for the amnesty to Hamas, Hamas fighters, because this plan has a provision that if they lay down their arms, then there will be an amnesty for them. Besides that, if they want to exit Gaza, if they want to leave the territory, that there is also a provision for that. Besides that, the aid supply is also being ensured in this plan, and after that, President Donald Trump has also ensured and assured that there will not be any plan or any execution of the occupation of West Bank or annexation of West Bank, which was a prime concern for the Arab world, the way things were progressing. Besides that, in this plan, US President Donald Trump and Benjamin Netanyahu has also assured that there will be a rebuilding and reconstruction of Gaza. So definitely this is considered, and that's why it is being welcomed by not only Prime Minister Narendra Modi, but also the Islamic world has also issued a joint statement, by the foreign ministries of Qatar, by Indonesia, Turkey, Pakistan, Saudi Arabia, UAE, and all the Islamic countries who had their meeting with the US President Donald Trump on the sidelines of the UNGA session. They have also welcomed this peace plan. But now the ball lies on Hamas's court that whether they want to return the hostages, because this is the precondition for the rollout of this peace plan. And you will recall, Anjali, that during even his previous term, US President Donald Trump has also rolled out a peace and a rebuilding plan for an Abrahamic Accord plan.
All right, Pranay, thank you for getting us those details on the Gaza peace plan by US President Donald Trump. And with that, we're now shifting focus. We're getting some more breaking news. And Prime Minister Modi's Navratri and Durga Puja celebration on Ashtami. Prime Minister Modi may visit CR Park Kali Mandir tonight, and he has said that hope's sacred occasion brings happiness and peace. So Prime Minister Modi will be celebrating Navratri and Durga Puja on Ashtami, and he may visit CR Park's Kali Mandir tonight on the occasion of Ashtami. And Prime Minister Modi has said that he hopes that sacred occasion brings happiness and peace and excellent health into everyone's life. So Prime Minister Modi has extended greetings on Navratri and Durga Puja. He has said, and I quote, heartiest greetings to all fellow countrymen on the auspicious occasion of Maha Ashtami of Navratri. My wish is that this sacred occasion brings happiness, peace and excellent health into everyone's life. Prime Minister Modi will be celebrating Navratri and Durga Puja on Ashtami, and we're also learning that the Prime Minister may visit Chittaranjan Park's Kali Mandir in the national capital tonight. And let me now go across to Aabha Bakaya of Business Today TV with all the updates of the markets in this business show. Aabha, over to you.
Good morning and welcome to Market Opening on our brand new collab show between Business Today and India Today TV. Just after 9 and we're here to get you ahead of the curve as markets kick off trading for the day. Let's start with what's hot in the corporate and financial space this morning. Asian markets volatile as Japan clocks lower than expected industrial activity in August. Markets await the interest rate decision in Australia. Overnight, Wall Street investors largely ignored the threat of a government shutdown in the US. Tech shares, power major indices, gold continues to rise to new highs. All eyes on film production stocks as US President Donald Trump announces a 100% tariff on all foreign-made films released in the US. Trump's plot twist to hit the Indian film industry hard, both box office and streaming services to bear the brunt. Media reports put earnings from the US in 2024 at nearly 1,500 crore rupees. India to remain the world's fastest growing economy at 6.5% this fiscal. Ratings agency Moody's says high US tariffs to have a limited negative impact on India in the short term, but could hit investments in manufacturing. Warns GST cuts could stress government finances. Big relief for those with home loans. RBI allows faster transmission of interest rate cuts on floating rate home loans. Banks allowed to reduce spread components before the current 3-year lock-in period. Scope of lending against gold and silver collateral extended, allows banks and small urban cooperative banks to extend working capital loans to any borrower using gold as a raw material, not just jewelers. We also bring you an exclusive conversation with DLF Retail's Pushpa Bector from Delhi's DLF Emporio Mall on the impact of the geopolitical uncertainties on luxury sales. Absolutely none. Festive season demand driving robust sales this season. All right, let's dive straight into the setup and look at the action overnight on Wall Street. Continuing to see action on the tech shares, of course. Trump, uncertainties continue, but overnight markets remain well intact, a little bit in the green there on S&P, NASDAQ and Dow. Asia this morning a little bit more uncertain as Japan sees slightly tepid industrial growth, and we're also watching out, of course, for further action by central banks, this time in Australia. And then, of course, we'll also touch base on what the RBI is expected to do this week. So Asia a little bit mixed this morning. Gold and silver continue to be at all-time highs, gold in particular. Let's bring that up for you this morning. That's continuing to really drive a lot of action and interest. Safe haven buying and also just sheer momentum. Look at the action there on gold. 3,873 is where it is trading now, up another 0.5% overnight. We're now joined by Shailendra Bhatnagar, our Chief Analyst and Editor Markets. Shail, good morning. How's the setup looking to you on the Nifty today?
Well, Aabha, to your comment that there is absolutely no letdown in sales of luxury items. I know you shop at DLF Mall, and I'm not surprised at all that sales there are fantastic. But 7 days of losses on the Nifty and 3 very important... We've been together for a while, Aabha. We've been working parallelly to each other for the last 20-25 years. But coming back to the Nifty, last 7 sessions have been bad. And today, 3 very important events are happening. The last day of H1, which is half year, September 30th, the last day of the bank Nifty's monthly expiry and the weekly expiry of the Nifty. So all put together, short covering is likely to happen. We are already at September 3rd lows. And of course, we've seen 7 continuous days of selling pressure. So there should be a turning point in the market today. And the fact that US 10-year yield is quiet, crude is quiet. So I see a bounce back in the markets on short covering. And of course, no let up in PSU banks, particularly Bank of Baroda. Keep an eye out on that. As also, defense stocks should show a comeback. And of course, the entire PSU basket. That is where value buying is happening, Aabha. So a green tick in the markets today is what my expectation is.
All right. Well, green is always good, even if we're doing it incrementally. But a few stocks and news talking about some of those spots in the market to watch out for. Bharat Electronics, and it's been constantly in action, but I just want to pull up BEL because the company has secured fresh orders worth over 1,000 crores across defense and communication. So while execution will be key, BEL continues to be in the news this morning, and we'll run through some of those other newsmakers in a moment. But let's focus on film production and distribution stocks as well. After the Trump shocker that's come in with the US president announcing 100% tariffs on films made outside the US. No clarity on the date that these will kick in or any other details, but the move is certainly creating some amount of panic in the industry as it does get a significant part of revenue from overseas. Let's go across to Krishna, who's joining us this morning, Krishna Gopalan, in terms of the kind of impact this would have on the industry and why this is significant. Krishna?
Yes, hi. I think there are really two angles to this. One, if you look at film industry like Telugu, about 60% of the overseas collections come in from the US. So this is going to hit them really hard. The other fact is a lot of countries like in Eastern Europe and the Middle East have actually offered substantial subsidies to film producers. So it makes it very lucrative for people to move their shooting to those locations. So from a cost parameter also, the US obviously takes a bit of a beating. My own assessment is for the Hindi film industry in particular, 30 to 35% might come in from the US. The tricky part right now, the way I see it, Aabha, is how the cost is therefore going to be more. Is it going to become more expensive for the consumers? And that's obviously going to be bad news. At the same time, you have the Indian diaspora, which obviously supports big ticket industries like Telugu, Tamil and Hindi. So the issue is still there, but I think the largest story is really the fact that President Trump obviously wants to push production back to the US. And we're also speaking of all this at a time when movies like James Bond and those in Spider-Man series have all largely been shot in Europe. So it's obviously going to be a bit of a tricky situation for a long time to come.
Absolutely. Well, this could see a dent on distribution deals, compel studios to rethink release strategies, and also outsource how they outsource their work. Krishna, thanks so much for joining us on this morning. We'll keep an eye on some of those stocks as we open. And remember, according to a CII report, the industry is poised to grow about 2.2 billion by 2026. That's from 1.3 billion in 2023. And some of the biggest earners in recent years in the US have been, for instance, a Bahubali 2 at 200 crores, a Kalki at 160 crore. So gives you a sense of the kind of impact that we'll see on the industry. All right, Dharmesh Kant also joining us this morning. Dharmesh, it's expiry day. Must get your take on how the index is set up and what you're anticipating in trade today.
Yeah, good morning, Aabha. नवरात्रि की आपको और सभी को हार्दिक शुभकामनाएं. I think the market is, thank you so much. I think the market is poised for a bounce back and it's been trading in a range. So now it's on the lower end of the range. If you look at from the fundamental perspective, the equity risk premium has fallen to 1.41 1 year forward, which is almost 10-15% discount to a 10-year mean average of 1.52. That means equity earnings yield has gone up to 5.1, whereas bond yield is 6.4. So it's given enough cushion room for the market for value buyers to dig into it. Expiry will have its own set of volatility. We don't know what kind of trades are being placed, but as far our working suggests, a lot of shorts are there in the market. So some of them is likely to be squeezed out on this day. So we are expecting a green on the market today. Any declines are to be bought into. Going forward from here till Diwali, I think cherry picking, if you are doing, you should be better off. And markets are likely to climb up from current levels, maybe 25,200, 300 on the upside.
All right. Talking about cherry picking, I'm going to come back to you on some of those stocks in a moment, Dharmesh. Let me take our viewers through some other newsmakers just as we count down to opening bell, and then I'll come back to you. But we've got Blue Dart Express announcing a price hike of about 9 to 12%. So we'll be monitoring the impact there on margins, on demand. IRFC, they've signed large loan agreements worth about 16,000 crores for power and infra projects. So we'll be tracking their loan book and the impact there as well. So keep an eye on that one. Thomas Cook is in focus. There are some ongoing developments in the tourism and foreign exchange business. So some action there on Thomas Cook also expected, or just at least keep an eye. It was up 3% as well, right in pre-open. L&T obtained a $700 million SLTF from Standard Chartered. So again, from some of the heavyweights, keep an eye on L&T this morning as well. Moody's has revised Tata Motors' outlook to negative from positive after a cyber attack on its UK subsidiary, which resulted in a production shutdown. So keep an eye on Tata Motors this morning as well. Okay, let's take a look at the opening bell and how we've kicked off trade for the day. A marginal uptick, as was indicated in the pre-open. So you have just about a 0.3% uptick on the Nifty. Nifty Bank also steady this morning right now. At least ticks of green coming in across. IT also steady, up close to about 0.5%. Let's pull up auto because that one has continuously seen action as we count down, of course, to Diwali. And continuing to trend higher. They're watching out for the first as well, and the kind of sales numbers that come in. Financial services index is also trending higher, and we'll continue to pull up some of those gainers and losers for you. But it looks like there's plenty of green on the screen this morning. On the downside, Realty just about flat at this point of time. And there you have it. Titan, again, festive action playing out. Titan, Hero, BEL, of course, on the news with orders worth over 1,000 crores. Fresh orders now coming in. That counter has continuously been in the news. JSW, Asian Paints, some of the other movers this morning for you on the screen. While FMCG continues to be slow and steady. And Tata Motors today down about 0.5% on the back of that negative rating from Moody's with their UK subsidiary JLR facing a bit of a shutdown there. So that one has been a little fluctuating. Lots of different news pieces coming in on Tata Motors, but that's the news this morning for you on that particular counter. I'm trying to get a sense of the advanced decline. Shell, what's standing out to you in today's trade? We are seeing a little bit of pressure or profit booking perhaps on the like of it internal or, you know, some of the other Nifty majors. But overall, we are seeing somewhat steady breath in the market.
Absolutely, Aabha. I think it's a very strong 3:1 advanced decline ratio, which means 1,500 shares are in the green and 500 are in the red. So it's a positive start on Dalal Street on the last day of September, the last day of the H1. And from tomorrow onwards, you will see a lot of auto numbers coming in. So they'll add to the enthusiasm. Metal and IT stocks are the top gainers as far as the indices are concerned. And out of 19, 17 are in the green. In terms of all-time highs, absolutely no surprise. Gold financing company, Muthoot Finance, 1% higher, 3,090. And the best PSU bank so far, Indian Bank, doing pretty well, 1% higher at a fresh record high of 730. Overall, a positive start on the last day of Bank Nifty's expiry. And of course, the Tuesday expiry weekly for the Nifty. Aabha.
All right. Dharmesh, talking about banks and financials, what are you focusing on within that segment? Because we've got PSU banks that have been trending. We've got, of course, the financiers. But what are you looking at overall when it comes to some of those banking names? We've also got, of course, the RBI meet tomorrow, and we're expecting comments and, with regards to the outlook going forward. So banks will continue to be in focus.
Yeah, I mean, RBI meet is likely to be more of a dovish commentary coming tomorrow. But I think if it surprises the market with one more rate cut going into the way, global things are panning out, it would be a big booster for the market. So we are expecting a surprise tomorrow. I mean, 25 basis point maybe in the offing because interest rates are very benign. And this suits well for the entire, economic enthusiasm which we are trying to push into the environment. As far as the entire space is concerned, everything is looking attractive, but particularly we have focused more on, public sector banking space. The stocks have been doing quite well for last few days. Yesterday, we also released an initiating coverage on Bank of India. which valuation-wise looks pretty attractive. And for last 4 or 5 quarters, they have been consistent in delivering a growth of 12-13% on the advances, while the asset quality being intact. So PSU Bank is one basket, Bank of India, Bank of Baroda, one can look at acclimating at all declines and riding the high for next couple of quarters, along with NBFC space, where housing finance companies looks very attractive to us. So maybe a PNB Housing Finance, LIC Housing Finance, Aadhaar Housing Finance as a basket one can look into, because with lower interest rate and disposable income going up, affordable housing is one sector, one space where traction is likely to pan out. And it's better to play with housing finance companies rather than picking a stock, a realty stock, and playing it out. So these are the spaces which are definitely in for a good going in next 2 quarters.
All right, what's happening on metals, Dharmesh? Because we have been seeing a steady uptick across most of those counters. Is there a trend brewing there? What's driving some of the action coming in on some of those metal stocks, and where would you look in that pocket?
Yeah, if you look at metal stocks, I mean, the metal prices has to be distinguished between international prices and domestic prices. So globally, metal prices have not moved up except copper. So copper is the only metal which has gained around 15-16% year till date. Apart from that, aluminium, zinc, tin, steel, all have seen a price correction. So that's not happening out there. India has been trying to stop any dumping into the domestic side, and that's the reason why steel prices have seen some part of attraction. So if domestic focused metal companies like, Hindalco is not particularly domestic focused, but the domestic business is quite significant. So Hindalco, JSW Steel, these are the companies which still one can look into. You have to be a brave one because it's a very volatile kind of a sector. But we do think metal has an upside for the next 6 months in the offing, because infra activities is going to pick up, and then there's always a tendency for a run-up before the budget, which will come in the January 26.
All right, so continuing to trend positive on some of those metal counters. Shell, anything else standing out to you? Just after opening this morning, we've got shipbuilders continuing to be in focus. Masscow Dock, in fact, let's pull that up because the dividend coming in there, 2.7 per share. I mentioned Thomas Cook. They've also been, of course, working with the Ministry of Tourism and lots of other developments on their foreign exchange business. We've got a whole host of other stocks in news, but from the large broader markets, Shell, anything else that's standing out to you?
Absolutely, Aabha. Gold and silver. I have 17 gold and silver ETFs at fresh record highs. Gold has crossed 1,16,000 rupees per tola, and ladies and gentlemen, silver per kilo is 1,43,776. I have this feeling, Aabha, unless these two metals correct, you won't see the money coming back into equities. So all trading instinct, all risk on trade is moving towards gold and silver. And a fantastic rally. Year-to-date gains on silver is 58%. That on gold is about 50%. No stopping that. And of course, as Dharmesh ji mentioned, Hindustan Copper, Hindustan Zinc, from the metal space doing pretty well. As far as top gainers are concerned, well, you have Sonata Software doing well, 5% higher. It's a bit of a scattered market as of now, but Nifty 84 points higher, Bank Nifty higher by about 272 points. Banks, and banks all the way.
All right. Give me a moment, Dharmesh, while I also take a look at the RBI policy. Today marks the second day of deliberations by the MPC. The outcome will be announced tomorrow by the Governor, Sanjay Malhotra, and it's being tracked closely by markets, of course, for decisions on interest rates and their impact on equities. To discuss expectations on rates and the growth outlook, we're joined by Indranil Pan, Chief Economist at Yes Bank. Indranil, good morning. Everyone's hoping for a surprise, but do you think the RBI will be a little prudent or be dovish and go ahead and really give everyone a festive boost?
I think from my perspective, I would expect RBI to be more on a watch and wait mode at this point in time. I think the amount of uncertainties that the RBI would be struggling through at this point in time is quite significant. On one side, you have the tariff, which we have not really seen a clear resolution on. On the other side, we have had GST cuts, which is likely to boost consumption to a certain extent. And the GST also has brought down the prices quite significantly, or is expected to do so. My perspective is that because this is a policy-led sort of dip that we will be expecting in terms of the prices, the RBI needs to see through it. The GST cuts and the built-in consumption boost that we are expecting in the absence of a clear uptick in terms of the private investments demand could actually turn out to be relatively inflationary on the core side. And therefore, the RBI would have to weigh the growth versus the inflation perspectives of all the policy changes that are happening before taking an incremental decision on rates tomorrow.
Okay, fair enough. I also want to ask you about some of these draft changes that the RBI has recommended and the kind of impact on that, talking about more flexibility for borrowers, for banks, easing lending norms. What do you make of their latest rules that they've suggested for more flexible loans for borrowers, wider access to credit against gold, and easier capital raising avenues for banks as well? I would just love your comments on that. It's, of course, still a draft in the making.
Well, I think obviously India being a developing nation would actually have to very significantly rely on domestic savings for its journey towards the future growth. And the reason I say so is that there are significant tectonic changes that are happening in the global scenario, and there's a huge amount of policy reset that is happening. And very clearly, when there is significant amount of uncertainty in the global atmosphere, the mobility of capital also tends to suffer, which is very clearly evident in the balance of payments data that we are seeing today, with a lower FDI, relatively muted FPI, low ECBs, and therefore a slight reduction or a slight muted reliance of India on global capital. And now that clearly brings to the fact that we need to harness domestic savings in a very significant way. And that is how credit offtake is likely to happen. But unfortunately enough, we have not seen private investments pick up. So from the asset perspective of the banking sector, corporate loans is not really picking up. And therefore, the reliance in terms of growth of the lending sort of book, we still have to rely on personal consumption expenditures. The critical ones are obviously the housing, which should provide an upside because of the interest rate cuts by the Reserve Bank of India, the reduction in the cement GST, etc., could actually provide a push to the housing sector. On the other side, we are expecting the GST cut to also provide a boost in terms of white goods. And that is where I think the personal loan of the banking sector would actually be playing a part. And to a certain extent, the overall dampening of the personal loan space was on account of the regulatory tightness. That, to a certain extent, therefore, it is sort of likely enough for the Reserve Bank of India to reduce that. To provide that push in terms of the lending side.
Okay, so clearly a lot of action wanting to be seen on the lending side. Now, markets are pricing in a quarter bips of a cut. That's what Dharmesh also said. You're saying they're going to hold. Everyone's waiting to see what happens. If they do hold, what's your outlook, Indranil? What do you suggest the central bank will perhaps indicate in its commentary?
I think along with the hold, they should also stay on a neutral stance. And I think this is possibly not the time where you have a clear forward guidance for the market. That's something that may be actually negative if you are looking at the GSEC yields or how yield setting happens in the domestic economy. Yesterday also we saw the 10-year GSECs moving quite high. And it actually went close to the 660 levels. So to that extent, it may be actually negative for the GSEC yields. But I wonder whether, given all the uncertainties with the data that we are talking about, and despite the fact that inflation is close to the lower bound of the flexible inflation targeting regime, we can see a very clear guidance from the Reserve Bank of India. And they should clearly indicate to the market that it's a wait and watch mode for them, and clearly tracking data to decide the future course of action, without, of course, closing the door fully on future rate cuts and expectations of that.
Okay. All right. Thanks so much for joining us this morning and taking us through that, Indranil. In fact, a few other calls coming in. ADB has kept India's growth forecast unchanged, but they've cut India's FY27 growth forecast by 20 bips, citing headwinds from the tariffs, of course. And RBI, as I mentioned, is allowing banks quicker reset to bring down rates on floating rate loans and a whole host of other suggestions in their draft norms on gold loan, exposure limit, credit reporting. So all of that is something we're going to continue to track for you. Dharmesh, thanks for patiently waiting by. I actually want to get your perspective as well on what we heard from Indranil in terms of some of these draft norms leading to a whole boost on the lending front, whether it be on the consumer front, whether it be on real estate. Do you feel that this will give even more of a fillip to what we're seeing in driving consumption?
Yeah, definitely, yes, but my sense is it's time to do a front foot batting rather than to have a defensive or a back foot stance. So there are, structural challenges out there, but you're also sweetly placed where you can go ahead and do a rate cut. Still, there won't be a significant damage. The minor, challenges maybe still be there. So I do think in order to, boost the entire thing or give us the right sort, there is an elbow room for RBI to go ahead with the rate cut of 25 basis points. So anyways, currency has depreciated. So you can't, hold that onto account. At the same time, US has done a rate cut. So that gives you enough elbow room. And the sectors are same. I mean, housing is one sector which should reap the benefits of any further rate cut coming in and the rate cuts which has already been placed. So we have a take on playing that through a housing finance company. So these are the places which are there in the market for the offering.
All right. I also want to mark Blue Dart Express. Remember, they've announced a price increase of 9 to 12% effective January. That's one factor that's perhaps keeping Blue Dart in focus today. And volumes, Shell, the stock, let's just pull that up for you. It's up about 9.5%. Is it really this news that's driving so much traction in the counter today?
Absolutely, Aabha, and this comes from a multi-month low as far as Blue Dart is concerned. Last time we see the lowest price of 5,695, it was April 2025. So a good mark right at the start, 9% higher, and the volume is phenomenal. Already 160,000 shares have been traded in the first 15 minutes of trade, compared with just 21,000 on a daily basis as of average. So this is a blowout. Let us hope that you see better days ahead. And of course, banks are doing extremely well. Silver is in top shape, in particular Bank of Baroda, as also the entire banking basket, the PSU banking index at a fresh high. Aabha.
Okay, so we're tracking banks. We've talked about metals as well in terms of what's moving today. And PSU banks, in fact, it's been an ongoing trend. We've talked about some of those defense names as well, like a BEL that continues to be in focus. Blue Dart, in particular, this morning is looking fantastic on the back of volumes. And as Dharmesh was saying, the entire structural story in terms of, whether it be lending, whether it be real estate, for instance, all of that is likely to continue to play out in the market as well. Auto, Dharmesh, we didn't speak to you about auto, so before we let you go, let's get a quick comment from you on that. We're expecting those sales numbers in tomorrow.
Yeah, the numbers are likely to be very good and a surprise even on the expectation. That is what we are, looking forward to. And from here till, coming 1 month is likely to be good for auto companies, and one has to stay invested. Any declines out there has to be bought into, though I do understand a sharp run-up has happened in the auto companies. Post that, near Diwali, if traders can take profit taking. But my sense is autos after 2-3 years are in for a structural, 1 year of a good market. So even if you stay invested at current levels, nothing to worry, because earnings and numbers will follow. And the top pick remains out there, Mahindra & Mahindra, Hero MotoCorp from the two-wheeler space. These are the top two picks we are adding.
All right, so those are some of the auto names for you. Let's pull up Reliance Power. They've also entered into an agreement to divest shareholding in 5 Indonesian coal companies. That's a value of 12 million. So let's just see what Reliance Power is doing today. And up about 1.5% right now. A little bit of a spike definitely coming in on that one. L&T is quiet despite that SLTF from Stand chart. So L&T is a little quiet, and BEL, of course, continuing its up move there. And let's also pull up IRFC and just see how that's doing. The Indian Railway Finance Corporation, a lot of loan agreements coming in there, so that one's looking good. Let's just see on the charts how that's picked up. Just a marginal uptick, not too much reaction right now. You know, we have been tracking that entire segment, Shell, from defense to shipping to rail, power, infrastructure, for instance, that entire gamut of stocks. Nothing in particular might be standing out today, but on the charts, you know, from a slightly longer trend point of view, which are some of the names that continue to look good?
Aabha, as far as the infra space is concerned, Thermax, Cummins, and of course ABB and Siemens. These are stocks that have corrected very sharply from their all-time highs, anywhere between 35 to 50%. And at this point of time, given the infrastructure push that is there in the system, you would see a lot of value buyers, a lot of long-term investors trying to get back into the same story that was there about 1.5 years ago. But as always, please consult an independent financial advisor should you be looking to add these stocks in your long-term portfolio. Aabha.
Ramesh, anywhere else in this market that you're also seeing opportunities for value buying?
I mean, small cap and transmission and distribution side, we are seeing good opportunities. For example, Translate lighting is looking good to us. Atlanta Electricals, which had a debut yesterday from the IPO, they are looking good to us because the entire, grid system is already operating at peak level. So you need to have a parallel grid for transmission of solar generated electric power because the method is different from the normal, thermal generation. And there is where huge opportunities likely to come up because already 300 gigawatt of additional capacity is likely to come up in next 5 to 6 years. So these are the areas where one can, look into for a long-term perspective. So they are looking exciting as of now.
Right, lots to pick from in this market. Dharmesh, Shell, both of you, thank you so much for joining us this morning and taking us through your outlook as well as some interesting trends in the market. Now let's move our attention to the luxury space, and festive shopping seems to be intact with footfalls during this year's festive and wedding season being double-digit. Let's go across to a conversation with Pushpa Bekta, Senior Executive Director and Business Head at DLF Retail, highlighting how consumer trends are shifting, with Gen Z increasingly shaping the luxury buyer profile.
Globally, we are in a lot of uncertainty and a lot of things happening geopolitically. But tell me, did that have a direct impact of any kind when it comes to customer footfalls at the Emporio, or are people prioritizing what they want? You do what you do.
Yeah. Well, it's so far, I can tell you there's been no impact. In fact, we are seeing huge green shoots, as you can see, for the wedding season. So this year, the wedding season is on set early, and it's an extended one. And there's early festivities too. So we haven't seen any dampening. In fact, we've seen a growth in footfall. The first quarter, H1, has been pretty good in the high double digits. So we are happy with the growth, and we've also put in a lot of new efforts, right? Because Chanakya has got slew of 40 new brands, and that has brought in a very big range of uber luxury customers who never thought that these products are available in the country and these brands are available. So there is from Amiri to Golden Goose to Messika on the first floor. And we also have now the Rolex flagship, and we have the Brunello, and very soon you'll hear a few more brands that are opening. So I think it's a great time for luxury because people are improving their quality of life, and they're very discerning about the quality of what they purchase, they wear, they own in their homes. So there is that discerning element that has come in, and it's not just about status, it's also about internalizing that I deserve better quality. Yeah, and it's really that evolution that you're seeing.
That's where we leave it on the show today. Do tune in at 3 p.m. for all the market closing action.
Sir, try berry pulao.
Madam President, Excellencies, while asserting our rights